I think this month has been, I would say, good, but not without its pressures in terms of managing the challenges of liquidity and financing in the market. So I'm happy that we have grown ahead of the market. That part I'm happy with, but not as easy as in terms of ability to get the sales going through. But we remain confident that this is a temporary issue, and it should sort itself out in the coming days because the intrinsic market demand is there. Availability of liquidity is there, don't see a concern there, but cost of that liquidity has gone up, and that pricing is probably taking a little bit time for it to sort itself out, would be my sense of the issue there. Too early to read at this point in time. As far as passenger vehicles is concerned, the festive season has been muted. You saw the market growth is only about 1-2%. We have grown at 11%, which is very creditable. And that for me is a combination of innovations that have been come through. We almost launched 4 products in this period, which has kept us in the news, as Mayank puts it, on the dinner table conversation. And at the same time, the buzz being created around Harrier also keeps the brand image going. So we are quite happy with the performance of 11% growth there. At the same time, we do remain concerned that it's now, if I add the 4 months together, it is a decline. So one would always want tailwinds in the market and then beat that tailwind in terms of delta growth. But if the market growth itself has come down to this level, that does leaves us a bit worried on that one.
Okay. Let me ask you something on the commercial vehicle side. Since the growth rates are slowing down, do you think the higher discounting coming back into the marketplace, how do you really see pricing move in the market, wherein there is a lot of confusion amongst buyers when it comes to insurance with axle loads? Most of the auto companies I spoke to have given me that feedback that insurance of 5 years and buying that upfront is something which has confused a lot of buyers, and the start of the festive season is quite slow. So how do you really see the marketplace for commercial vehicles, given the fact that we have seen very strong growth in the last few quarters?
So I think the fact that you're having infrastructure investments going in there, and the fact that basic demand exists and the GDP growth is there, means that you're also able to take up freight prices as well, means that the cycle is well underway. There's no challenge as far as the intrinsic cycle is concerned. What we are seeing is a temporary hiccup coming because of liquidity being in the market. Okay. We are not reading any signs of there's a demand side of situation has got a challenge there. But yes, petrol prices, I would rather call it as, so far we had only tailwinds, almost no headwinds, and now we are seeing a few headwinds. That doesn't suddenly make it all that there's a problem in the market. We need to navigate those headwinds better. And for me, if I rank order the headwinds in the list, I think the number one issue would be keep the liquidity flowing, ensure that the cost of the liquidity is reasonable, and the industry in terms of freight rates, etc., should continue. Whatever fuel price increases are happening, that should funnel through in terms of freight increases as well. In which case, the CV cycle will continue to roll, because the people who have contracts, for them, the business is as usual. There's no difference at all, and they are getting the freights for that as well.
And thankfully, crude prices are coming down.
That's right.
And passenger vehicle segment, you have been doing well on the turnaround side. Also, we have seen you break even quite smartly on that segment. But there is competition in the marketplace. We have seen market leaders also starting to increase discounts on certain products and offerings. How do you really see the passenger vehicle business moving in terms of profitability and in terms of growth? Of course, you said that Harrier is one new launch in the SUV segment. How do you really see those new products pushing up your sales?
See, it's core for us. As part of a turnaround, you need growth as a central piece of a turnaround. You need to get growth. Innovation and growth are a central piece of a turnaround, and that is something that we would want to be absolutely on top of. Okay. And over the next 3-4 years, we have almost 11 new products coming into it, and our addressable market to which we are able to put products in, it goes up to 90% from the 60-odd% we have today. That's a huge step up in terms of opportunity that we have. Secondly, I think the focus on impact design, focus on product quality is yielding us rich dividends. So today, if I look at some of the statistics, are quite a change from what we used to be before. Today, we sell almost 87% of our vehicles to individual owners, which means the fleet sales has come down to a very, very small portion of our total vehicles. That's a huge shift in consumer psyche. Two, if I look at our age of the consumers who are buying our vehicles, bulk of them are 35 years and below, which is a very different consumer profile that you have. And for that consumer, we are we are in the sweet spot of that consumer because our designs are absolutely cars that make you turn around and look at it. Two, they are high on value, they are feature rich, and connectivity is been built into it. So this means it hits that sweet spot extremely squarely. And with the Alpha and Omega architectures now coming into play from Harrier onwards, we will be able to put more top hats onto the same platform, which means the speed of innovation picks up further. Or you take this period of the last 3 months, putting in 4 products in a period of 6 weeks, that just changes the dynamic in which Tata Motors is operating. So I think we have a lot of things going for us. We still have work to do. Let me not get ahead of myself. We still need to improve our profitability. We still need to ensure that our dealer profitability improves. We still need to ensure that these launches that are happening on time, in full, within budget. So there is a lot of work still to be done in our area, but we are happy with where we have reached so far.
Okay, good to know that. And let me shift gears and come to JLR, because that is one of the biggest moving part for Tata Motors. Of course, times are challenging, but what do you make out of the entire global scenario? How do you see demand shaping up for the European market and the Chinese market, wherein we have seen a significant amount of slowdown for luxury car market?
Yeah. And I think we can do a PhD thesis on what are the implications of this on, we could do diesel thesis, we could do a diesel taxes thesis, Brexit, Trump, trade tariffs, name the piece. We have boiled it all down and saying that the net implication of all this is demand is likely to be muted. You can either waste your time discussing that, or as a company you can waste your time worrying about all those, or just focus on what you can do. So we have consciously said that split the company into two. The company needs to have two visions. Rather it has to have a twin focus. Focus number one is demand, and that focus is simple: business as usual. Keep your innovations going, ensure your retailers are profitable, ensures that your execution is flawless, S&OP works. That's for me is normal business, no change, business as usual. Simultaneously start assuming demand is going to be extremely muted. In that scenario, how do you generate value? You have a profit target of 4 to 7%, you have to become free cash flow positive, work backwards from there, and to say that what are the level, what are the envelope of costs you have, envelope of capex you have, envelope of working capital you have, and start cleaning those out. And that is the reason why Project Charge was launched, so that we are able to manage this demand volatility or whatever situation can be, and still generate value in the business. And hence we have called out Project Charge. It's a 2.5 billion call out over 18 months. It is not 1.5 years. Those words have been chosen with care to ensure there is a level of precision to everything that we do. And we want to measure ourselves and make ourselves accountable to deliver that. And if you look at the components of that, we have taken $1 billion out of capex, and that is just we have not touched a single product, because that is business as usual, keep going. But business unusual will be, we will not want those testing facilities, we will not want those new infrastructure that we had. It just makes us more choiceful in where we spend. Second area we have looked at is we have lost a fair bit on working capital, because the demand has come off so sharply. We have overshot the runway, and therefore we need to get back on track and that's the reason why Castle Bromwich went to 3 days. That's the reason Solihull was shut down for 2 weeks. And we will take all measures to ensure that the working capital gets back to the normative levels. These two alone will generate $1.5 billion of cash over the next 18 months.
Correct.
But that's not good enough, because that is just cash. We need intrinsic cash, which is profitability. And therefore we said we want a cost out plan of about £1 billion. And that for me is important, because it makes us, how do you put it, fit for the future. It makes us nimble, it makes us lose a bit of cholesterol that we have built in, and that is important. And we are going to look at all lines of the P&L, starting from revenue to pricing, VME, FME, material cost, design costs, people costs, manufacturing, every piece out there, because that is how you go about looking at a full turnaround. That's exactly what you've done in Tata Motors.
Correct. In
the case of CV, it was 1 year back when people are speaking to us, this is the same questions which we addressed on CV. And then we asked on PV, we delivered on that, and now we'll start delivering on JLR as well.
But how do you get rid of your cholesterol when the currency volatility is quite high in the marketplace? You have crude prices which are volatile, and more importantly, commodity costs have been quite high for most of the auto companies globally.
Yeah.
So in this kind of a challenging environment, do you think cost controls is something which is slightly out of your hands? And of course, you target for $1 billion of cost savings, but are you confident of achieving those
We are absolutely
targets?
confident of that, because it depends on how do you put it. Cost savings for us is a mindset. I mean, the way I come from is a mindset. It's not about it is under your control. Every cost is under your control, and it's more a question of how you attack it and what are the ways to actually take it out. And some of it requires longer work to be done, but it is first a mindset of saying that it is no more business as usual, it is business unusual, and it is important to actually go to the last digit and fix it. And if you look at the areas we have looked at, we have given a fair amount of detail there. And I'll compare and contrast. Take for example Tiago here. When Tiago started, it was at a discount to the market leader at that point in time. We're now running it at a premium. That's because the brand stepped up. That's generated a fair amount of profitability. Now, are there opportunities for pricing in the case of Land Rover? Are there opportunities for VME reduction in that, because we can actually sell on the brand and not necessarily on the discount? What is the balance out there? Or, for example, features in your car. I mean, are each of them, have we actually rank ordered the features which the consumer wants? And wherever he wants that, he or she is willing to pay for that? And if not, is that feature really there? Is it our wish or is it the consumer's wish? Can you pivot the organization towards the consumer? Or if you say the maximum warranty costs are coming in this particular material, should I just capex it and engineer it out, that problem, so that forever and ever it is fixed? Work after that. I think there's a fair amount of data-based granular work that is happening. And that's what, if you see, we have actually given an update as of week 7. It's not that we are giving very loose stuff there. This meeting happens every 2 weeks. And there are decisions being taken. So there's a rhythm of, if you have just observed, JLR is making announcements every 2 weeks. That's an offshoot of the steer comms actually taking decisions, and we then come out and announce immediately whatever is public or whatever is internal, we start the execution. There are 500 such ideas we are currently working on, and those is only after 7 weeks. This will go for the next 2 to 3 years. So we want a groundswell of action that's happening in JLR. That's exactly what's happening in Tata Motors, in CV and PV. There's no difference from this and JLR. So hence our confidence.
And let me ask you, there are a lot of political ups and downs in Europe with relation to Brexit. How are you really engaging with the UK government so that the transition is smooth and the export markets for you from the UK are not disturbed, or there is no anomaly or unfair trade which happens between nations? How are you really
I think we are speaking to every level of the UK government, from every level of the Tata Group. So therefore, that is something which we would continue to maintain. JLR teams have been extensively engaged with the government there as well. We have explained the situation, how does the supply chains work, what are the challenges involved in the supply chain. Our requirement is an extremely simple requirement. We need to have frictionless free trade that is going in. That's all that is needed. And then we should be able to more or less sort it out in terms of the issues there. And whatever we see, hear, read, everything else that you see, I think that is something which everyone agrees with. There's no problem challenge on that one. How will the deal play out? Let's wait and see. But are we absolutely on top of it in terms of doing our best to ensure people are made well aware of the issues? Absolutely we are.
Okay. And sir, one final question on China. Demand again there has been volatile. Of course, there are trade tensions between the US and China, and that is playing a part on the consumer sentiment. How really are you looking at the Chinese market? How do you keep the China JV profitable and side by side ensure that the demand remains healthy? And there is no volatility which the consumers face moving ahead?
See, the external environment, it's fair to say that we did not anticipate the magnitude of the drop in the Chinese demand.
Okay.
It used to be growing at 25% and it's come down to about 2%, and then this quarter it's gone down to minus 8%. I don't think even in our wildest of scenario plannings we have planned for a minus 8% in China ever. We have a scenario for the lower profitability, but not for a complete collapse of the Chinese market. So that for us, it is fair to say that we underestimated the magnitude of the drop that is there. So now that we have observed the drop and we are now clear about it, we can do a few things to get that back on track. Okay. Step number 1, keep the brand healthy. In any and the contrast is PV is identical. There's no difference at all. Brand has to be healthy, brand has to be salient, innovations have to continue. So E-Pace goes into China. You know, have Evoque going into China, the new Evoque, it's coming after 8 years. So that is what made JLR what it is today, and that relaunches after 8 years. So there's something also talismanic about it as well. So let's see how that goes through.
Right.
And therefore the innovation will continue apace. So that is rule number one. Second thing we are doing, dealers have to be with you in this journey.
Okay.
So our dealers, they have lost a bit of profitability in this kind of a wild collapse that has happened there. So we need to restore the profitability and get them back on track.
Okay.
And that's an area we're working extremely closely with them on that. And in response to that, we are now taken out inventory. One of the reasons why our sales fell much more than others, we've taken a fair amount of inventory out of that system because we've acknowledged that this demand, this is not a temporary blip. It is like it may continue for a while, in which case get the profitability of the dealers up fast. You can't wait for that, else they will lose interest. So we have done that, and that is something which we are now working closely with them to ensure that they get back on track again. If these two we get this right, you got your brand in the right place, your products, your dealers are profitable, and your innovation pipeline continues. That is the way out on this of this trough that they are seeing.